Back, we have an important GDP number coming in today. The second quarter GDP expected to come in at about 7.5%, which would be a sequential improvement quarter on quarter. But I guess for the markets, it's the third quarter GDP that will be more important. We have Jahangir Aziz, the Asia Economic Research Head at JP Morgan, joining us on the phone line from Singapore. Good morning, Jahangir. Thanks much for joining us. Well, before I ask you about a GDP number, which will be really not of top of mind interest for the markets, what are foreign investors telling you post the demonetization? How are they approaching India and its macros?
Well, I think, everyone is, basically trying to wade through the uncertainties, both of the near and short-term impact of the demonetization, not just on liquidity, which is and banks, which is something that's preoccupied markets over the last few days, but also on the economy. And all of this, people are trying to make sense whether or not this actually changes the way where businesses are run in India, or this is simply a liquidity shock and business goes back to usual after the liquidity shock has gone through. We do not have any clarity on any of these factors. We are week 3 on a process which most likely will extend through months. So I think like the rest of us, we are all sort of sitting on the sidelines, watching events unfold and trying to make sense of the uncertainty.
Say, are foreign investors looking at it as a bold reform measure, or are they looking at it as reform gone awry?
Look, I mean, it's a very difficult to use these terms, largely because we do not have any template in history of an economy of this size going through a shock therapy of this kind on demonetization. So if we did have a template for other countries that we could compare in this Indian experiment, then we could start ascribing adjectives to whether to the reform process. So I think again the countries that have gone through these kinds of demonetization have been much smaller, less complex, and typically economies that have had seriously large hyperinflation, which is not the case in the case of India. So without a template, I think it's been difficult for most analysts outside of India to see what is the reform. So I think, again, whether it's a bold reform or not, or whether it's gone awry or not, is very difficult to assess because what am I assessing it against? What's my benchmark? And I don't have it.
So, Jahangir, for today's GDP data, what's your expectation? It doesn't assume so much importance now, but nevertheless.
That's right.
And also,
well,
how much would you be scaling down your FY17 and FY18 GDP estimates?
Right. So I think we're slightly below market consensus at 7.3, and to a large extent we are below consensus largely because we think that government consumption is probably going to dip a little bit more than what the market has based on spending numbers that we've seen through the third quarter, calendar year third quarter. So I think in terms of, again, in terms of scaling down fourth quarter calendar and first quarter calendar, we are still trying to grapple with these numbers. We do not have a single data point on real activity beyond weekly cereal prices. And everything else is just anecdotal at this point in time. And again, depending upon how successful this experiment is, we'll have to figure out what the near and the medium-term shocks are. But at this point in time, I think there is a serious amount of uncertainty regarding the impact on the real economy. There is both the near and the medium term. There's a serious degree of uncertainty regarding how monetary policy reacts next week and how the budget reacts next year.
Well, those were going to be my questions, but we will do that closer to time, Jahangir, because we could get data points even up. We'll get the GDP number, we'll get more data points, and we'll speak to you closer to the monetary policy and, of course, the budget. Thank you very much for joining us now. So at the moment...